Hello and welcome to Asking for a Trend. I'm Josh Schafer, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we'll be diving into. Stocks rose on Friday as Wall Street assessed President Trump's nomination of Stephen Miran to the Federal Reserve Board of Governors. Investors seemed to like what they heard, and at the end of the session, all major indices ended higher. And for the love of music, concert goers have new options to get tickets on the secondary market that won't cost a small fortune. We'll be introducing CashorTrade. It wouldn't be summer without a concert or a music festival, and it may not have to strike a sour note when it comes to your wallet. Cue CashorTrade. It's a fan-to-fan face value ticket reselling market founded by brothers. The platform has global users and has processed thousands of transactions. Joining us now is Brando Risch, CashorTrade CEO. Brando, can you just give us a brief run through off the top here? How does the platform work?
Absolutely. Well, before CashorTrade is a platform or an app, it's a community. It's a movement of fans across the globe coming together to buy, sell, and trade tickets for face value. It's a community that is looking to support one another over profit. Generally, people come to CashorTrade when they find out they can't attend their favorite event that they spent a lot of money in tickets for, and they want to pass those tickets off to another real fan so they can get their money back and gain a good review in the process. So the process is built out to connect fans in a very social experience where people have a face and a profile, and they make a post on the site, and then buyers make offers. And the seller gets to review those offers and the profile of those buyers before they choose who to sell their tickets to.
And Brando, I'm curious from a business perspective here. So tickets are being sold at face value, right? So those are sort of exchanging hands at an even level. How does the business work for you guys? How are you making money?
So we run an escrow and an insurance program, and that we have a 10% fee on the buyer. Or if you're a loyal member who feels like you're going to use the app more often, you can become a gold member for $4 a month, and you avoid any extra fees.
And you're obviously at a core of the conversation when it comes to tickets, right? We have all been on one of the competing ticket websites over the past couple of years, and we're looking to go see a show, and it's $300 more than you expected, or Taylor Swift comes to town and it's a couple $1,000s more than you hoped it'd be, right? What has been sort of the response to this platform, and how do you get the community interested in it when it comes to bands and performers wanting to be on that platform versus partnering with the large players that are in the space?
Well, that's a good question. I mean, there is a lot happening right now in the industry. The industry as we know it is changing. We're starting to see a lot of these secondary ticketing platforms have a decrease in revenue of 25% over this past quarter. And there's a lot shifting over to the primary markets where there's legislation in place that is sort of creating some restrictions around what the secondary market can list tickets for up above face and the exorbitant fees that they might have. And CashorTrade is working directly with artists, festivals, venues, and their primary ticket companies to be a solution to help keep tickets at the original price, to support fans, but also to support the industry, because the predatory secondary market for years has been scraping all the money off the top and keeping it out of the ecosystem. CashorTrade reverses that, provides a resale opportunity for everyone to participate in and keep the money in the ecosystem.
Brando, talk to me about scaling this business. I mean, where are your goals in the terms of the next year, the next 2 years? Where do you feel like this business can grow to?
So as we work with primary ticket companies with direct API integrations, we are partnering directly with those artists and events. And we partnered with global artists such as Mumford & Sons to help them keep their tickets in the hands of real fans. The movement, the face value movement that we're seeing, where there's a major shift towards the primary market, whether it's dynamic pricing or whether it's restrictive policies from the predatory secondary market, there's a large possibility of growth as not just the fans, but the industry is really starting to focus on what drives these events and to restrict the outside pressures that are pulling the money out of the ecosystem.
Brando, I do want to just zoom out here and talk about the concert industry in general, right? I mentioned off the top, it's August. A lot of us are going to shows. We're enjoying it. What's the read on sort of the concert consumer this summer? Is it where it normally is? Is it slowing at all? What sort of macro trends are you seeing within that industry?
Yeah, so 53% of organizations are reporting a higher turnout than 2024. The industry is booming. We're talking about a $638 billion live event industry, and it's only been growing on the backside of COVID. I think COVID was a major moment in the history for fans and for people to recognize their need for social connections. And in working with CashorTrade, it's very value driven. So we're seeing more and more like Gen Z fans want to come out to value driven events and wrap their experiences around meaningful opportunities. So we see a lot of potential of what's going ahead because of the industry at an all-time high.
That makes sense, Brando. Exciting stuff. Appreciate you joining us today.
Great, thanks so much.
It's time now for What to Watch. Starting off on the earnings front. Earnings season raging on with reports coming in from CoreWeave, Circle, and Cisco, among others. Cisco announcing results for the fourth quarter after the market close on Wednesday. The company's 2026 forecast will be in focus for investors when it reports those earnings. Analysts expecting strong demand for its AI-related products, which could push sales toward the top end of its fourth quarter guidance. Taking a look at the economy, we're getting a key piece of data on Tuesday with CPI. That's the Consumer Price Index. Economists forecasting total CPI, headline CPI, to fall 0.1 percentage point to 0.2%, and core CPI to tick up to 0.3%, those on a month-over-month basis, giving us more insight into inflation as the Fed maps out the future interest rate path. Moving over to the Federal Reserve, some fresh commentary from multiple Fed officials coming throughout the week. This coming after President Trump posting on Truth Social on Thursday and nominating Stephen Marin, Council of Economic Advisors chairman, to serve in Fed Governor Adriana Kugler's seat as a Federal Reserve governor. Stick around, much more asking for a trend still to come. U.S. stocks closed out the week on a high note with the NASDAQ setting another record close. Let's get to it with Yahoo Finance's Jared Blickery for the top trading day takeaways. Jared, what do you got first?
That dip was bought. And what dip am I talking about? I'm talking about the one from last Friday. It was 1 week ago that I was standing here next to the other Josh, and we were talking about, it was kind of a scary day.
Yes.
So let me just show you the S&P 500. I think we're going to start out with a 5-day. Let's move this to a 10-day so we can see that. Right so here. That's when we got that whole payroll scare. And it wasn't that the number itself was that bad, although it was below expectations. It was the revisions. And we've been talking about that a lot this week. So it looked like things were kind of bad. But look, that was bought. It was only a 3.5% dip or something like that from those record highs. And we are right back up. The S&P 500, by the way, today missed a record high by just less than 1 point. It was really close. And then here is a 5-day price action in the market, in the sectors. So consumer discretionary is first, then tech, and then interestingly, we were just talking about this, consumer staples. And you don't usually see those two consumer sectors right at the top because staples is more defensive. Nevertheless, that's what we got this week. So we're going to count one for the bulls in the green. I just wanted to highlight too, something else kind of random that, not so random, but I think this talks as to the cyclicality and the bullishness right now. Semiconductors did very well. And you take I don't think we have time for this, but you take a look at some of the semiconductor indices, they are right around their all-time highs and they're just kind of trying to break out, but they haven't. Contrast that with the software, and we see a lot of red here, but software isn't the leading indicator that semiconductors are, so that's where I'm gonna kind of be focusing.
So semis would lead and then software sort of follows?
Because of the recurring revenue, software has turned into more of a staples play, almost, of the tech industry.
It's interesting.
If that makes any sense.
And you brought up, Jared, that dip bot. Of course, that was off economic fears.
Right.
When you think forward to the rest of we didn't get a lot of data this week.
No, right? Next Tuesday we get CPI, and so this ties into that stagflation. I hear this word bandied about all the time in financial news, and we talked with a guest about lowercase s stagflation, not the 70s type. This was Chris Wolf on Stocks in Translation of Pennington Partners. Let's take a listen.
By the way, small s stagflation gets this more stubborn inflation because it rotates and a little bit weaker growth. And so that's not 70s style, but it's likely to be a conundrum for the Fed because how far do you want to cut? We're not getting that much growth, and there's so much stimulus coming down the road in the next 18 months that the opportunity really is to see how that evolves. But I expect the rest of this year to be just like this with slowing growth and persistent inflation.
Yeah, that was really interesting because he talked about inflation rotating, and so you have goods sector rotation, goods sector inflation, and then services sector. And he was saying that it's kind of the baton has been passed back and forth over the last few years, but we haven't seen it blow out of proportion like we did before. By the way, that episode is out on Yahoo Finance's site, so let's check that out.
And Jared, we're talking about inflation. We're talking about perhaps maybe some other things that move when we talk about inflation. What was going on in the alt space this week?
I like that transition here. Gold had a little bit of a tariff scare, and I was looking at gold's record high yesterday, and I wasn't seeing a lot of news behind it, but this fell almost kind of under the radar, and there are a lot of wonky details in this story. Let's see if I can find GC equals F. There we go, 2.4%. I will show you let's do a 5-day view so we can see. Here we got up to those record highs yesterday, then we fell off today. Apparently there was a letter from the Customs and Border Patrol that indicated that gold, especially out of Switzerland, and this is but worldwide, was going to be taxed if it had a stamp on it. And so the Swiss gold that comes to the United States that is used by the COMEX exchange in certain denominations, that was going to be taxed or tariff, but as it turns out, it looks like there's news that President Trump is going to somehow provide an exception for that, so we got the rollback there. Nevertheless, gold still hovering around $3,500 per ounce, still around that record high, so that just tells you the strength of the underlying market, regardless of all this tariff stuff.
My gold fun fact, Jared,
Yes.
I saw someone pointing this out this week. Look at that year-to-date move, 30%. Depending on what we consider an asset class, it's certainly outperforming stocks, and it's one of the top asset classes this year.
Gold is one of the most hated asset classes ever by a lot of institutional investors. Nevertheless, you cannot argue with price. Only price pays, says some famous day traders.
We'll be watching that uptrend in gold for sure, Jared. All right, that's going to do it for us here. Appreciate you joining us. Stick around, though, everyone else. We've got much more coming on Asking for a Trend coming up. Let's take a look at what to watch in earnings. Coming up, we're going to have CoreWeave, Circle, and Cisco all reporting. CoreWeave reporting its second quarter earnings after the market close on Tuesday. Investors watching the cloud software company after announcing it would acquire data center provider Core Scientific for $9 billion. That had been something that weighed on that stock over the course of this past quarter. Also reporting on Tuesday is Circle, sharing its second quarter results before the market opens. The stablecoin issuer is reporting its first quarter as a publicly traded company. Street consensus estimates expect Circle to report a loss of $1.01 per share and revenue of $648 million. Finally, Cisco reporting its fourth quarter results on Wednesday after the market closed. Cisco, a communication equipment manufacturer, is expected to report a growth in revenue following declines throughout fiscal 2024. AI demand and Cisco's enterprise IT product are anticipated to be the key drivers there. Analysts say that 2026 guidance will be of greater focus for investors, anticipating further product growth in spite of tariff uncertainty. President Trump's tariffs aren't derailing the stock market rally, and there are a couple reasons why that Wall Street is pointing to. For more, we're bringing in senior markets reporter Inez Ferre with the Yahoo Finance Investor Playbook. Inez?
Yeah, Josh, and the strategists that we have spoken to said that, look, despite the tariffs, they still are optimistic about the rally that we have seen in equities in the longer term. And part of this is because the tariffs, we have a little bit more clarity about them now, and the effective rate is expected to be anywhere between 15 and 18%. And what Wall Street is saying is, look, this isn't enough to derail the equity market. This isn't enough to put us in a recession. Also this week, we had some optimistic events happening, like with some of the bellwethers of the economy. I mean, you had Apple. I'm going to pull up a chart right now so you can take a look at the Dow. Apple up 12% over the last 5 days, up 13% as it's been able to receive a carve out for the tariffs. You have some of the chip companies as well, that this has been optimistic for the market when it comes to the tariff front. And now Wall Street is saying that the markets are looking beyond the tariffs and really looking at the AI trade. If we take a look over at the NASDAQ for the last 5 days, you'll see some of these big names, NVIDIA up 5% for the week, Google, Alphabet up as well. So this has been fueling optimism about the AI trade. You had the Palantir earnings that came in very strong this week. And on top of that, then you have the soft labor data that came out last week, Trump's nomination for the Federal Reserve Board seat. That is fueling this optimism that the Fed will be cutting rates in September, and that is what the market is looking forward to.
Definitely seems like that's been one of the key market drivers right now. Inez, appreciate you joining us.
Thank you.
That's a wrap on today's Asking for a Trend. Be sure to come back on Monday at 4:30 p.m. Eastern for all the latest market-moving stories affecting your wallet. Have a great weekend.